Guys, welcome to Crypto Insight. I've been a professional options trader for 20 years, and about a year ago, I switched my focus from equity options to crypto options. Why? Because of the huge volatility and opportunity in the space. Trading Bitcoin has allowed me to multiply my capital in a safe way. And in these videos, I will give you the benefit of my experience and insight into how I'm reading the crypto vol market and using options to either hedge or speculate on future expected moves in the crypto space. Don't forget to subscribe and like the video, and I hope you find this content useful. Thanks. Okay, so on crypto, so obviously we tested that key level at 28, 29 area basically last week, right? And we didn't sit there for very long. So, as is often the case with these really important technical levels, they often do hold on the first test, right? And so we had a decent bounce, and then over the weekend, as always, we had another little thrust lower. This time we only got to 30,000, and again we're finding ourselves ripping back to 36. So price action to me looks relatively good, right, on that front. Bitcoin kind of holding the levels that it needs to hold, right? So relatively encouraging, I would say. Also Ethereum, for me, a big level there was 1700. Below that, I had 1550 as a bit of a level. So 1700 held nicely. And, that's gone straight back up to this quite key area of around 2200, right? So both of them kind of showing us some signs of resilience and not completely breaking down. And that's all in the face of Binance being banned in the UK, or that was the headline, right? Now, the FCA has come out and said it's not necessarily a ban. They're just not happy with the anti-money laundering and KYC processes. So, maybe if there's something they can do there to improve that, then it might be all right. But market doesn't seem to care, right? So, the price action on that news shows us what? It shows us that, the market doesn't really believe it's a real ban, right? Or there's so much bearishness priced into crypto right now that at the margin, bad news like that doesn't make any bloody difference, right? So that's kind of what I would take away from it. So what does that mean? Does that mean if we get an incremental bit of good news, then we absolutely fly? Who knows, right? It's possible. There may well be a bit of a short base that had built up, and we're just unwinding some shorts here, right? We're squeezing some shorts out that we're trying to press it to the downside. Yeah. So anyway, so that's kind of what we've seen. Now, the thing I've found interesting, probably the most interesting, was where the spread between Ethereum and Bitcoin got to, because that got to a very key level for me, which was this kind of 0.055 area where it bounced really dramatically off that level once before, right? So for me, that was the opportunity. I wasn't sure about crypto outright, but I was thinking owning Ether versus Bitcoin was kind of a decent trade here, certainly from a tactical perspective, right? Because it felt like Ethereum had got a bit oversold, and given where the spread had got back down to, and I didn't think that the kind of narrative for Ethereum was so bad that it justified that amount of bearishness on a relative basis, basically, right? So if anything, I thought that the narrative is going to actually pick up in Ethereum over coming months because of this kind of update that's going to get released that everyone's been waiting for. And, it's not like we don't know about it, so it's well flagged, so it shouldn't really have that much impact. But what you often see with crypto, because it's so sentiment driven, and there's a lot of retail people in there who aren't overly sophisticated in the way that they trade, you do often see on these big pivotal kind of events that it does rally into those. Yeah. And then maybe it becomes a buy the rumor, sell the fact type thing, but there may well be some bullishness in Ethereum in the lead up to that event. So the vol's been relatively well behaved, right? So as we held on to those supports, and the vol was getting a bit elevated into that breakdown when we were touching that 28, 29 area. But since we held that and the market's kind of chopped around in like a 5,000 point range, you know, the vol kind of stabilized, right? So you have, if we look at kind of the at the money implied and realized vol here on the 1 month, you can see here, so we had the sort of 1 month stuff spiked to about 110, and then it's kind of stabilized, and we're back to around 90 vol basically, right? And the realized vol hasn't done a whole lot, right? The realized vol is pretty stable as well. It's a little bit above 90, so the implied vol is kind of basically leading the realized vol now, suggesting that the realized vol is heading back down basically, right? So that's kind of what sometimes the implied vol kind of, well, the implied vol is always like forecasting what it thinks the realized vol will do basically. Yeah. So vol's kind of back towards 90. So wouldn't really say it's a clear buy or a sell at that level. That's kind of a relatively fair kind of level for it. Term structure, on the other hand, if we want to look at where we were like a week ago, so we were pretty inverted a week ago versus where we are today, which is the green, right? So the brown is where we were a week ago, the green is where we are today. So a bit of a normalization, a flattening of that term structure back to something, you know, it's still not normal. Normal would be upward sloping. So you'd expect all these short-term expiries to go from like the high 90s back to maybe around 80, 85 at some point in the next sort of week, if things stay calm. That's kind of where you'd expect that curve to kind of collapse back down to. And then skew has just been really stable, right? So skew's been quite, you know, active this year, but I'd say over the last sort of week or so, it's done nothing, right? So you got, it's firmly for the puts still. So it's about 10 vols over for the puts in the 1 week and the 1 month stuff. In terms of the 3 month stuff, it's much more neutral. It's about 2 vols over for the puts, but it's been very, very stable, right? So for the last week, those skew numbers haven't been flying around too much, right? They've been kind of in the same sort of place. So not really any big change in skew that are telling you anything, you know, dramatic is happening in the relative pricing of calls and puts and people's perceptions of the market, right? So all it really means is people who own Bitcoin in general, who use options, are probably selling calls as a bit of overwriting, and they're probably buying puts to protect that scenario that we might break below 28,000, which hasn't happened yet. But if it does happen, you'd expect vol to explode pretty dramatically if it was to happen, right? So that's kind of what skew's saying to me. If we look at the analytics to see where the gamma concentration is, if there is one, obviously now the June's rolled off. So, you know, July is going to be your main driver of where the gamma concentration is going to be. And you can see these big spikes in the 36 and the 40,000 area. So clearly that's where the kind of area of interest is in terms of July expiring gamma. Around that 36 to 40,000 area, right? And if you look at the max pain, that's where the max pain comes in as well, around 40,000 again, right? So you may well get a situation where we kind of start to gravitate in towards that 40,000 area for July expiry, but we need a bit of bullishness to get us back up there probably first, right? Before that can really kick in and do anything. Now, if we got some really nice bullish news that made us overshoot and go to 44 or 45, then it might be a case of that July gamma is kind of pulling us back down and really preventing us from getting to 50 or 60,000. But right now, you know, if you're bullish and you're seeing that max pain up there at 40,000, you're probably feeling okay about that, right? Because you're thinking maybe we can gravitate towards there now that all the June positions have gone. We've had a flush out in the market on positioning, and even now we're getting relatively bearish news on the tape, the market's trading up. So that should make you feel all right, probably about being long, right? And, you know, legacy positions that I've been running have been June, July call calendar positions, where I was selling June calls and buying July calls, collecting a bit of premium off the June calls, letting that pay for some of my July premium. And now I've just got the Julys naked. Once those Junes rolled off, worthless. So that was good. I managed to cash in on the premium of the Junes. And now I'm just long the Julys, which have also dropped in value, but they've got an entire month to recoup some value. So let's see how that plays out, basically. Yeah. So those are my old calendar positions that I had been running. And in terms of the new position that I put on to express this kind of Ether versus Bitcoin spread trade, well, that was basically, I had a look at, I've been waiting for that spread to get to the support level that we discussed. And I was like, rather than just buying it and being exposed to a very volatile spread that could go a lot further, if I'm wrong, can I play this in optionality? And the way you do it in optionality, and the way I like to do it in optionality, is to say, well, can I buy call options on Ethereum struck way out of the money and sell call options on Bitcoin struck way out of the money for the same premium, and basically have a position that if nothing happens or we stay around here or go lower, both the call options will go worthless and you would have spent no money, basically, right? But if the market was to rally and the crypto market in general was to rally, and if my hunch is right that Ethereum will outperform and that spread that we're looking at will go from 0.055 back up to 0.07 or higher, then that means Ethereum's going to outperform by maybe 20%, right, on the way up. And if Ethereum outperforms by 20% on the way up, then my call options on Ethereum are going to go up more than the call options that I'm short on Bitcoin, basically, right? And so that is the way of playing it. And so one input into that, one ingredient into that trade is that the spread has got to a level that's attractive to enter that spread. But then the other ingredient is what about the vol differential between Ethereum options and Bitcoin options, right? And for me, that was less important, but it was still important. And that had got down to a more sensible level that I was willing to pay. I don't mind paying a bit more for Ethereum vol because it does tend to move more, but I don't want to pay ridiculous amounts, right? So I've ended up landing on August as my expiry of choice. August options right now at the money are about 105 vol for Ethereum. And, you know, for Bitcoin, same stuff, same expiry is more like 93, right? So that spread was kind of around 10 or 12 vol points, basically, that spread, okay? And then on the upside, the skew wasn't miles different either. So in terms of the upside calls that I was buying versus the upside calls that I was selling, that vol differential was somewhere between 10 or 15 vol points. And for me, I can justify that because I think Ethereum's really got legs on the upside if it wants to go. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. I'd also encourage you to sign up for a free trial to our live and interactive Macro Insight Zoom call. As part of our trading community, as well as the call, you'll also get access to our Telegram chat and our weekly market reports. To find out more, you can also connect with us on the socials. All the links are at our website, www.options-insight.com. Thanks.